Good morning, welcome to the area Securities Markets Update. During the Asian session today, we had three economic releases and events from Australia and Japan, which had a slight impact on the markets. Beginning with Australia, the retail sales increased for the second month in a row, rising by 0.4% in July, comparing to a rise of 0.6% in June, matching the market estimates. The good news is that the trade balance deficit narrowed more than expected to contrary to the expectation, toward minus 1.36 billion in July, comparing to a deficit of minus 1.56 billion, while anticipated to widen to 1.77 billion, which is the lowest deficit in 3 months. In Japan, the Bank of Japan left the policy unchanged as widely expected, repeating that the economy is recovering moderately. However, the bank also downgrades its view regarding the housing market, saying that the housing investment drops due to the tax hike, and reiterated that the bank will act if needed. Going forward to the European session ahead, and during the early morning hours, all eyes will be headed toward Germany, and as we will be waiting for the Germany factory orders, the estimates are to rise by 1.6% in July after a sharp decline by 3.2% in June. However, the weaker order is likely mainly due to the effect of the Russian sanctions. Moreover, French jobs report will be released today. The unemployment rate is expected to rise further to 10.2% in the second quarter of this year, up from 10.1% in the first quarter, while there is no estimate to the unemployment change as of yet. The impact on the market is likely to be limited today or short-lived from these figures, as we will be waiting for two key events from the Bank of England and the European Central Bank. The Bank of England is expected to keep the official rate unchanged at 1%, while the ECB decision seen as a very close call. The estimates are to keep the current policy unchanged, while the markets will be looking for any hint from Mario Draghi about the next QE program. A surprise is also possible today through cutting the interest rate towards 0.10% from the current level 0.15%, with some hints about the future intervention with more easing. If the ECB kept the policy unchanged today, this would also disappoint the market, and the markets also may continue to buy the euro again, or the euro may rally, but this would not change the current downtrend as well. Stay tuned today, as we will be publishing a special report later today on the ECB and the Bank of England decisions, and for the expected scenario in addition to the possible impact on the euro and the British pound. Finally, in the U.S. session today, the ADP non-farm employment change may add 218,000 new jobs in August, which is also the same rate in July. A trade balance deficit is expected to rise again to minus 42.5 billion in July, up from minus 41.5 billion. We will be looking for a wider trade deficit, as petroleum imports are likely to recover in July after a significant decline in June. Jobless claims may also remain stable at 289,000 last week. And finally, the ISM non-manufacturing PMI may decline slightly to 57.3 in August, down from 58.7 in July. However, an upside surprise is also likely, along with Chicago and the ISM manufacturing PMI, which came in much better than expected. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching.